Good evening, everyone. Time for another silver update. This is a 30-minute chart of silver provided by netdania.com. You can click on the link below. Now, I've been documenting what I have termed a saucer formation. There's a lot of terms. I don't really get too into it. Cup formation, saucer formation, it's not really that important to me. It's just something that if you watch these markets long enough, you can see the patterns. If you're imagining this as a cup, you can see a handle and then a cup here, or if it's just a saucer, then it's just a plain saucer. But what we saw this morning on, you can see here a significant, I'll do an arrow to that, a significant amount of volume, not super significant like the breakout when Bernanke opened his mouth, but a decent amount of volume. We got this rally here. Now you can see we had a breakout above this resistance point at about 35.2, quickly a fallback. Now for technical traders, that's not uncommon at all. As I said before, I try to trade silver technically, and I'd have to take you back on the long-term chart, but I'm not going to go back there. I've shown you before, but I used to buy silver on breakouts, and I changed from buying it on breakouts to buying it on pullbacks. That just has to do with a change in a fundamental view from being convinced on the technical picture to being more convinced on the fundamental picture. And if you're convinced on fundamentals, then you're not going to sell what you have, but look for pullbacks to add. If you're looking at something on a technical basis, then of course you always want to buy a rising market. Rising markets don't have overhead resistance, and the higher you go, the most bullish situation for technically for a rising market is new highs, because there's no overhead resistance. So but anyway, back to this breakout, you can see that we had the rapid sell-off right after the breakout. That's a typical technical scenario. It has to do with stops, buy stops and sell stops. If you understand how those work, they are preset prices for buys or sells, and so there's a lot of people who may have had technical buy stops above this price, but they also might have set a technical sell stop way below this price, especially below this price, and so a sell-off below there is going to trigger those stops, and those people are going to take a big loss and not have a position. So that's why you see those types of reactions. But nevertheless, even though that occurred, you can see that the saucer formation, or whatever you want to call it, is still valid. The trend lines we've drawn is the primary trend line, which is still intact, and then the saucer lines, which meet from this high to this low, and then the support, and that forms this formation here. Now if we look over at gold for an equivalent time frame, you can see, as I pointed out, that gold is the stronger cousin at this point. It still has more of a stair-step formation. You can see gold did take out this overhead resistance and then fell back the same way silver did. But the stair-step formation, and let's do the freehand lines. The stair-step formation is still very strong here. You can see we didn't pull back here, and we did pull back here, but briefly penetrated it, and so we're still stair-stepping higher in gold. If we go out to the daily, you can see that we're looking at two very important resistance points with just a little tiny bit of price resistance left. Is this March high and then the late November high. Those are really not that much higher than the current price. We're talking about 1800, 1806. A price read of about 1807 is going to render all of this ancient history, and that's going to leave us with just this 1920 spike to have to deal with as far as overhead resistance. If we get above this price level, then that's going to be clear sailing, and as I pointed out, as far as technical traders are concerned, clear sailing into all-time high prices is the most bullish pattern you can have. Now, you have to remember with gold, we're already double our previous nominal high, which was 850, which brings us about 1700 for the double. And on silver, our previous nominal high was 50 bucks, and we're significantly below that. So if the bull situation in the metals continues, and I have no reason to think it won't, then silver has a lot of catching up to do, and we'll just have to see what it does to catch up with gold. Now, I want to go over to the currencies real quick. You can do the cross rates, and we want to go to the Chinese yuan or yuan, and you can see here, kind of interestingly, you have this Chinese offshore yuan, and I haven't explored that yet, but we're going to have to look at that later. But the US dollar, Chinese yuan, or renminbi, you can see I've been watching this very, very closely. If we go to the weekly, I've done some charts on that, and if we pull up the MACD, we have a very serious rolling over, one of the largest in over a decade, and you can see we're very close to going into new lows on the Chinese currency. That's fully to be expected, and we're going to talk about this when we get to the questions of the day about a strategy for trading that. So let's get over to the questions of the day, and there's a lot of questions to cover, so that's really going to be the main topic. I'm just going to answer a lot of questions here because I haven't caught up. For your information, one of the videos that I've done recently, that was the austerity riots. I had to pull that down because it had a copyright complaint, so I'm not really sure why that was triggered, but for safety reasons I took that down. Just to summarize, that video was about the austerity riots in both Spain and Greece, and I think those are spreading to Portugal as well. But it was documenting the GDP and debt ratios in those countries, and the trading economics charts indicate that the next countries that will be in the austerity riot situation will be the UK, Ireland, the United States, and Japan. So let's get to the questions. This is from John Silver, and it's about the Amero. And the question is, hi Brother John, great work, keep it up. I listen to what you say and to all the people that you link, and especially Gregory Mannarino. He says that the dollar is being devalued to nothing and that the Chinese and others would still like the euro to survive. Most people are convinced that a new currency will replace the dollar. Why not the Amero? People seem to have forgotten all about it. Maybe the powers that be would like it that way. Well, if you followed the Amero story, there are a lot of pictures of the Amero. You can go to Google, just type in Amero and click images, and you can see the supposed new currency that's coming out. Is that going to be the case? I don't really know. That's tied to the conspiracy stories. Maybe I'll put on a tinfoil hat Sunday about the corridor being built from Mexico through Texas up to Canada. I don't know. I honestly don't know the truth of those stories. Now, one of the big conspiracy topics, at least in the 80s and 90s, was the Trilateral Commission. The Trilateral Commission is another one of those groups that is alleged to be attempting to create world government. Now, the Trilateral Commission is a group you don't hear about lately, but the essence of what this is about is that there is a trilateral sphere of influence. The three legs of this stool are going to be Europe, the United States, and Japan. You could expand that perhaps and say the European area, the North and South American area, and the Asian area. Is that true? I don't honestly know the answer. But if it is true, and if there's anything true about the Amero, then it would make sense. I pointed out in other videos, if you've ever played the game of Risk, and that's a game that I've played frequently and always enjoyed, you'll remember that one of the goals of that game is to, as quickly as you can, take control of North and South America, because there are only 3 points of invasion. There's the Alaskan invasion point in the upper left-hand corner of the screen. There's the Greenland invasion point in the upper right-hand corner, and then there's one in South America. So if you hold all of North America and all of South America, then you really only have 3 invasion points. That's all that you have if you're holding North America. So it's clearly on a geographical scale only in the interest of the powers that be to hold the North and South American territories as a block, the Asian territories as a block, and the European / Russian / a lot of other areas as a block. So that may be the case. I haven't heard a lot about the Amero lately, but that doesn't mean it's not a possibility. And next question, gold and silver tax problems. This is from George Silver. Dear Brother John, your presentations are getting better and better. I'm sure that many of your followers, like me, are not situated in the USA. I'm English and live in France. As you can see by this chart, there are a number of problems regarding tax when buying gold and particularly silver. France is particularly strange. I say strange because some coin shops charge tax on a 50 franc Hercule, which is nearly an ounce of silver, whereas others don't bother. The French have yet to really appreciate this coin. It's still very cheap. Also, if I buy gold coins from the UK on the internet and use my UK bank account, I do not get charged any tax, although I would be charged if I bought silver by the UK system. Sovereigns in Britannia are neither taxed nor have capital gains tax. This is the reason I use Bullion Vault and gold money for buying silver, as there are no tax implications, whereas buying silver coins would give all sorts of problems. So I should imagine the advocacy of buying silver coins is somewhat lost on many of your followers outside the USA. So a complex question from George Silver. He's always great. Just to summarize, I'd have to say you want, regardless of the country that you're in, you want to find the lowest premium silver, physical silver that you can find. And I think that this question points out more than anything else that silver is such a underappreciated investment that there are a large number of anomalies that take place. And it's in your interest to take advantage of these anomalies. There are a lot of these anomalies, whether it's the used to be currency coins that are now numismatic, or the junk coins. They're in many countries. They're in Canada, they're in the UK, they're in Mexico, there's Libertads, there's others. So silver is still underappreciated enough that there are a lot of anomalies. And the summary I would give is that if you can buy your silver locally and in very low markups and in what used to be coins but are no longer circulated, but they have a significant amount of silver, that's probably going to be your best bet. I can't deal with all the complex tax issues from different countries, but I will say there are going to be anomalies, and you need to take advantage of those anomalies. And the next question is from High Gravity, and it is: the Fed just bought your mortgage. Hi, Brother John. Thanks for all you do. I look forward to every video. Always something new to learn. My question is regarding your 921 video with Pastor Williams. I got a lot of respect for him since he called the oil drop a couple years back. However, his statement that, quote, the Fed bought your mortgage on 9/13/2012 by committing to buy $40 billion in mortgage-backed securities every month seems a little odd. I think the best info I can find is there is 13 trillion of outstanding mortgage debt as of Q2 2012 according to the Fed. So 13 trillion divided by 40 billion is 325 months or 27 years to buy up all the toxic mortgages outstanding in the US. I'm confident that this whole comedy is racing to a cliff long before my grandkids arrive. So does this new Fed action really vitally endanger your mortgage? Blessings, brother. High gravity. Well, that's a complex question. I don't think that the Fed's buying of $40 billion a month of toxic debt is necessarily a solution to the mortgage situation. I think it's more a solution for the banks and for them to unload the most toxic securities they have. My mortgage, just to use an example, was bought by a private bank, a very small bank, and I think they probably bought my mortgage because they thought it was a good risk due to various factors. So it's going to be a situation that every individual is going to have to look at. Obviously, if you're completely upside down to the tune of a large amount of money, you're probably going to be looking at a walking away scenario. It's going to be in the interest of the people who are doing these loans to keep as many as they can in these loans and restructure them. But you have to look at your individual situation. And if you're going to get into a mortgage, you want to get the cheapest mortgage you can and the lowest interest rate you can and probably the lowest priced real estate you can. If you're doing it right now, you're probably looking at a decent deal compared to renting because those prices are going very high due to the number of people who are having to exit mortgages. So it's a really complicated scenario. I don't think the Fed's goal is to completely own all the mortgages, at least at this point, because $40 billion a month. Now, my figures are around 10 trillion. His figures are 13 trillion. But so, yes, $40 billion a month is really only going to buy up about $500 billion a year. So you're looking at a large amount of time. But that doesn't mean, and if you look at the Fed statement, that they're very clear about being open-ended about these commitments. The main point is that the Fed is buying mortgage-backed securities, and that is a definite departure from their past history. So if you're very close to the value of your mortgage and you have the ability to pay it down and you want to stay where you are, then you're probably, it's in your interest to stay there. If any of those factors aren't there, then it may be in your interest to exit. But again, I can't give financial advice. And next question. Semi-numismatic coins, and this is from Eyeball. Dear Brother John, first of all, thank you for the effort you have put into educating us. My question is, are we better off with semi-numismatic coins versus regular bullion? I know in some of your presentations you mentioned you get a little extra kick for your buck. I also understand you don't give financial advice. The net is full of opinions and warnings about investing in semis like Canadian Series and full Numi plays. Their point being in meltdown, nobody will give you more than melt value for your silver. What is your personal opinion on this? Now, if you watch my videos, you know that I have been very in favor of the semi-numismatics. I've made it clear, and this is in the past, so as we move forward, these premiums are going to expand. But in the past, I've made it clear that the Maple, Eagle, the Perth Mint series, generally those premiums are about $1.99 to $2.99, and it's my opinion that if you can get semi-Numis, which means issues from those same mints, but that have a potential collectability for maybe 50 cents or $1 more than that $1.99, $2.99 premium. It may be in your interest to buy those if you get some boost. Now, on the Canadian Wildlife Series, we've seen the Wolf Series from 2011. You can't find those for less than $70 anywhere. That's one of those that had a big boost. I don't know the reason why that is, but it really did have a big boost. And that gets to the next point about semi-Numis, and the reason why semi-Numis are a better investment, in my opinion, than regular Numis, if you can get them for just that small amount above, is that if you can see them being bought up for a significant premium above what you can get them for, say the antelopes right now are the latest wildlife series, and if you can pick them up for 38, 39, and you're seeing them going regularly for $50, then what that does, and I've emphasized this many times, is this gives you strong hands. And the main reason you want to have strong hands, and physical silver in and of itself gives you stronger hands, because the turnover costs are very high. And the main point is you want to hold on to your silver investment. I've recommended, and you can see in my office series, I don't recommend selling your silver for dollars at all. In fact, if you watch my office series about selling your silver, the protagonist says that he's not even willing to sell his silver for $1 billion an ounce. And the reason why is because the currency that they're currently being sold in is going to zero, less than zero. It's going away. So anything that strengthens your hands, and if that's numismatic coins, and what I mean by strengthening your hands is strong hands, hands that don't sell when the price goes down. And if the price of paper goes down and you see your numismatic coins not go down, that gives you stronger hands. So the main point is you want to be in something that gives you strong hands, something that doesn't tempt you to sell, because it's my belief that silver is going to triple digits, then quadruple digits, and then I don't know where from there. And we'll take one more question, and this is from Saritas, and it's, who owns SLV Contracts? Is there a way to estimate the percentage of private investors to corporate investors who hold SLV contracts? If everyone were to sell off their SLV contracts because of lost confidence in the institution, wouldn't the SLV price plummet and the physical price skyrocket? But there will be a lag of disbelief where lots of profit is waiting to be had, I believe. I watch eBay with settings toggled to bids 1 to 1,000 and time ending soonest under the search header silver bullion. Right now there's about a $6 premium to buy from various sellers of eBay, and that is only the most generic bullion. Also, what is your perceived threshold of what should take place before a hasty exit of this country? Should it be riots near home, the U.S. government open firing deadly weapons on protesters, or will it be something more subtle, like a split in values seen in the market? I'm not a math man with plenty, but I'm better off than most in comparison to the world, and I'm trying to think of a realistic exit strategy that I can use in times of turmoil for the survival of my family. I'm a veteran who meant his oath to his country and his countrymen of upholding the Constitution. Now an anger swells within me I've never felt, but I understand violence will not solve anything, and when pitted against the state, I will lose. So the only answer, apparently, is to flee. What a waste. Well, that's a many-fold question, so let's try to talk about them one at a time here. SLV contracts, I really can't tell you anything about SLV contracts except for the fact that it takes 10,000 ounces to take delivery, and I really don't know who's taking delivery. I've covered the SLV many times in the past. JP Morgan being involved, BlackRock being involved, and I would not touch SLV with a 10-foot pole. Next question. If SLV plummets in price, will physical silver rocket in price, and will there be a lag, and then the premium on eBay? Well, SLV, in my opinion, is just paper silver, and I've pointed out before that I believe that SLV and the other ETFs, except for perhaps Sprott, they're diversions. The purpose of the SLV and other ETFs for precious metals is to divert investment demand, which would normally go into the precious metals. It's to divert it into paper, and I trust the backing of that paper about as much as I trust Bernie Madoff. In fact, I would have to say I trust Bernie Madoff more because he's actually almost paid off 50% of his assets. So I'd have to say that I trust SLV about as much as I trust Lehman, who paid off nothing. And the next question is about a hasty exit from the country. Now, this is a very controversial topic. You have people like Simon Black and the Sovereign Man site and Dollar Vigilante and International Living and others who openly advocate an exit of the United States, and others who believe in staying and fighting. And I would have to say that my opinion on that issue is that I believe in the principles of the Constitution, and I believe that the framers of the U.S. Constitution were possibly the most brilliant men who've ever inhabited the planet, and certainly who have ever penned a political document. Nevertheless, the men that penned that document, they fled from a totalitarian nation, which was the King of England at that time, and they went and established a free nation, and they had to fight a war to keep it free in another land. So I don't really view people who flee what they believe to be a totalitarian nation coming to pass before their eyes in the United States. I actually don't believe those people are traitors to the ideals of the framers of the Constitution. I actually believe that those people who flee are the descendants of the people who believed in those principles, because their allegiance is not to a particular nation, but their allegiance is to the principle of freedom, the principle of free markets. And if there are free markets and freedom in other countries, then it is in your interest to flee to those countries. So I'm not a Simon Black basher. I'm not a Dollar Vigilante basher. I actually believe that if you believe that the United States is going to become a socialist, communist, Nazi, whatever you believe it's going to become, totalitarian nation, then probably the best thing you can do for it is to exit and take your talent and money elsewhere and try to establish freedom in another place. So back to the charts. We're looking for the Chinese yuan to again accelerate against the dollar. I'm going to have to cover, I haven't had time tonight, I'm going to have to cover Everbank and some accounts you can open to invest in this currency. That's another way you can flee the dollar. But the silver chart is forming that saucer formation. You can see it's very large here, and there's just a little bit left to go for silver to pass this 37 point, but for gold, which tends to lead the way, there's even less to go, just 2 points here, and then we have a challenge of this large area, and it's quite possible that a move through 2000 could happen quite rapidly, and we'll talk to you next time.